Welcome to Trading Lounge and the global indices, and starting with the S&P 500 here on the weekly chart. Now, what I would like to do today is would like to have a look at Apple, and I also want to have a look at the bearish count, and I also want to have a look at another count as well. So this has been my original count to the upside in terms of being a bullish count, and it hasn't been breached yet. So I'm saying yet because it does appear that even though on the S&P 500 the move down through the top here is a bit difficult to count as 5 waves down, because around the 4,500 area here, it's sort of consolidated around there and made it a little bit difficult. But we can see that with Apple, for example, the move down from the top here has clearly been in 1, 2, 3, 4, 5 waves here. So I have overlaid this particular count on the Nasdaq and the tech sector, which we'll have a bit of a look at as well. And then I was in the frame of looking for an ABC pattern back up into this area through here, and we're sort of on track to do that. But it does appear that now this current move down in the markets, what I try to do is I don't take one particular market as the be end and end all for a particular count. I like to get a consensus of a move, and I not only from the indices but even more importantly from the stocks. This here I can see that we've actually got 5 waves down through here, so I don't think that we're going to be coming back here. So we will need to look at this in terms of a more bearish count coming to the downside, and we'll have to put this in here as some sort of ABC. We're quite close to the 50%, but not, didn't really quite sort of get there. And yeah, because that's 5 waves, I mean, we could do something like 5 waves here for the A wave, a B wave, and a C wave, and come a bit low and then go up there. But it's not really what I'm sort of getting because of the close, because of this particular strong move to the downside. So I'm thinking that I will need to change my view of the situation, and really we want to make money, so we need to focus on that. So if this is 5 waves coming down here, we should get some sort of ABC pattern, and then we can short under here as a safe trade into wave 3 here. So going from 1,000 ticks to 100 ticks to view this area here. So I'll just get in a little bit more data on this, and this will be the same for the S&P and so on. So we've got wave 3, 4, 5 down here, and we're looking for an A wave, a B wave, and even when I did the stock video today, that's why I'm sort of looking at this here. Is that this is pretty clearly 5 waves here, right? So that means that we could still this will come down, the S&P will come down, all the rest of it. We could still get the B wave here and the C wave here and then go up at that point. But yeah, I don't think we'll do that. We'll need to look at some sort of wave 2 here and look at this as wave 1 here now. We had a trade in here, but we exited at number 8 here, so that's all good. But that's just the pattern at that particular point. So yeah, we are seeing this move down here. So from wave 2 here to wave 3 here, the 38.2% is at the 4.3 here. But this here, based on 5 waves coming down here, that means we should get an equal amount, and something with a little bit of equality to it. So the length of this equaling the length of this, which is going to bring us down to the 4,200 at that point. So that means that we would need to change this count if it's going to come down that far, because that would be too low for wave 4. Sometimes it's okay to see wave 4 to 50%, and maybe a tad more and those sort of things. But not so much in the bigger picture. In the smaller picture, we can take that on board. So this is why we need to look at the bearish picture, and we can also look at a bullish picture as well as shifting these over to here and looking for a 50-60% retracement level over here for this as well. So in coming into this area through here as a wave 2 at this point, bringing this over to here and then removing this one over to here, and this is what we're going to be looking at today. So what we want to look at is we want to look at the bearish count. This will be the new bullish count. I suppose we could also put wave 1 here and another wave 1 up here and 2 here, that sort of thing. But the focus is really all about this area here. We know that this move down here, by the way, while we're talking about bearish patterns, we know the move down here is not a bearish move because it's got overlapping wave structures here. This move is too high for any of this to play out here. So, but what it does mean that we can have some sort of ABC pattern up to here, and then another ABC pattern down to here, and the Feds get their recession at that point, So that's doable. But so we need to look at everything. We need to put them all on the table, and and then just reduce them one by one. So that's what we'll do. I don't think it's. I mean, unless you actually know something, then it's a little bit dangerous. Having convictions on your opinions and putting your money in there. From my perspective, is that sometimes the wave count is simple, and when it's simple or have confidence in it, then we can look for trade setups and we can make some money. And if we don't know what it is, then I need to stand aside and say I don't know what it is, and look at what it possibly could be, and then look for trade setups within that space. And that's where I am at the moment with this. So I do believe that because of Apple, we've got that 5 waves down here, and we will be looking for an equal move over here for that. So let's just go to the daily chart here for a moment. So this would be the original one here. We'll have wave 3 here with an A wave, and looking for basically an A wave, a B wave, and a C wave up here, and then coming down here. It is possible, if I just look at this as face value here, as to have that as corrective here, as a corrective move. All of this in here is got overlapping wave structures, and but when we look at that on some other markets, it becomes quite clear how to handle that situation. So we'll look at that when we look at the Nasdaq, because it's not to say that this is destroyed yet. It's just to say that, well, Apple's had that 5 waves down from the top, and it looks quite bearish at the moment with this sharp move coming down. And I'm not, because when you get a big move, we can also get quite emotional about our decision making as well. But my decision making is based on, well, that move down there's 5 waves, and it's come quite deep. So I was expecting 5 waves to come down, but as an A and a B and a C wave to come down, and then we'll go up from that point. And it's not to say that it can't do it from here. Look at all of this as wave, an A and then a B and then a C, and even have a lower move in here, can take the low out here and then go up here and then come back down. That's all possible. But the bias would be that it does appear to be quite bearish, and we will need to look at it a little bit differently. So on the bearish side of the market, if we just go to the 50K where we keep that bearish move, it would look like this here. So this would be the A wave here with an ABC here for the B wave, and then moving up here in 5 waves. So most of this structure counts quite nicely. It's a little bit tricky in here, and you could interpret that in different ways. I understand that. So yeah, there's different ways to interpret this particular move here, and also in this little area through here. So different Elliott people can have different counts within all of this. So I understand that, but just in the broad sweep of things, this would be, even if I've made some errors in here, but this would still be the case of the bearish move, and we'll look at this as an A wave and a B wave, and we'll come down to a C wave testing these lows down here. So that's the bearish move, and if that's the case, then we can look at, if I could just borrow that for a moment, we could look at this as wave 1 here and wave 2 over here. Now, if that's going to be the case, then we really need to look for a short position in this space here. So that means that, and we'll look at this on the intraday level because it's important, this 5 waves down here, that's going to pull back in 3 waves and then come down again. So that's going to give us our opportunity to short under the B wave as an ABC rally. So yeah, I mean, the thing is, even if you don't understand the B wave rally here, it won't matter. You can still short it under the low here, because there'll be 5 waves coming down, and I'll sort of pinpoint the low. But any sort of move up will be significant, and you'll see that significance, and then you'll be exposed with a low down here like this here. So that's what we'll look at next. So let's go and have a look at the bullish count, and it doesn't matter if it's going to be bearish or bullish, the bigger count. What we do need to do is we need to get ready for a short trade, okay? So that's what we're going to do, but we're just going to go into where we keep the alternative count at 10 here, and we're going to look at this move up here as wave 1 here, and that would look at this as wave 1 and 2 here, and 1 and 2 here. You could do this differently by bringing wave 2 over to here as well, but like I said, it doesn't really matter. There's a good case for being bullish in the markets. You only need to go to see Berkshire Hathaway and some of those stocks that have taken out the previous all-time high, and you'll see that those structures to the upside are not finished. So this is probably more logical, this one, than the actual bear market, but anything is possible. And because we're talking about opinions, it's a bit difficult. Opinions become more emotional than sort of factual as such. But look, I just think we'll just take one step at a time. And yeah, so this would be it at the moment. So we would look for some sort of move that would be that's the length of wave A here, and then we can bring that down to here. That will give us much the same length. That will take us down to the 4.2, which is the 50% at that point. But this is also the 50-60% from the other way, from the bottom to the top. So yeah, that 4.2 area there could be 41.50, 42 roughly. We'll see how that plays out. And even though I've got this as 5 waves here, then we'll also need to don't get sort of too lost in that, because when markets move, they can have a nice 5-wave structure like this, and everything's sort of rosy. But otherwise, markets can have 1 and 2 here, and then and it'll have 1 and 2 again, but it could have 1 and 2 again as well, and it could get a bit like this before it sort of pushes off. So and it stretches out a little bit further. So there's 2 ways that you can get your 5 waves. It depends where the extension's going to be within the structure and so on. So this move down through here, counting this as 5 waves here, is a little bit tricky. On the Nasdaq here, just why we're here on this point, on the Nasdaq here, it's a little bit clearer, where we can have 1 and 2, and 1, 2, 3, 4, 5 here for the 3rd wave, and then the fourth, and then the fifth. And in this case, we've come up to the 61.8% here. So yeah, that's, sort of done its job really, hasn't it? But all of this here gets a little bit overlapping wave structures, and you'll see that in the triple Q as well. But when you have a look at the XLK here, you can see that the move down here, there was no overlapping in the wave structures here. And we got that nice 1, 2, 3, 4, 5. So it has shown up. The nice 5-wave move has shown up in Apple. It's shown up here. It just hasn't shown up in the Nasdaq very well. Well, the Nasdaq okay-ish. Not too bad. The S&P 500, to be honest, that's just a mess in here, because it's got overlapping wave structures. That kind of happens a lot when you're around large numbers, and 500 is a large number, and attracts larger orders. And yeah, so it doesn't. Different people will interpret it this in different ways. All I'm doing is explaining, not justifying, but explaining how I got to the 5 waves to the downside based on Apple and the XLK for that. And the main reason is that we've got 5 waves here. That means we're going to get some correction, and we're going to get another 5 waves over here. So that's about the gist of it really. And as we were talking about yesterday and the day before with Apple and all the rest of it, we're looking at this being the A wave here, a B wave here, and a C wave up here. The S&P's at the 50%. We can see the Nasdaq's at the 61.8% there. So some of them have met their targets. Some are a bit shy of all of that. So it's a little bit tricky. Some other little important things as well is that, we're expecting a top in Nvidia and also Google as well. So they have made their tops, and they can move down from where they are now as well. So when I look across the sort of handful of tech stocks that I sort of cover, there was 2 different patterns that we talked about yesterday. So those stocks that are making new highs, they've done that. That's finished. They're all being completed. So it does leave the door open for the downside. So that's where the bias is also coming from as well. Now, will come from. So there's pretty clear there's 5 waves down here. And yeah, so it's pointless going short here at the moment. And we're going to get some sort of little rally here. And it may even be that we have here as 1 and 2 and 3 and 4 and 5 here to make wave 1 and have a larger wave 2 to pull back here, you know what I mean? And then have the wave 3 and 4 and 5 here, that kind of thing, So there's a few things that you'll need to be you'll need to sort of think out a little bit. I don't know, if it's just going to be a straightforward situation where we have, as I mentioned before, where we have 1 down to here, 2 to here, look for extension in the 3rd wave, a 4th wave, and a 5th wave. It could be a beautiful picture like that, So sometimes you get lucky, and sometimes, it gives you a hard time, So, but we still need to look for that short position here, right? So that's the main gist of it all. So I'm just going to go into spending a lot of time on the S&P. So we'll go through the other ones reasonably quick, but but covering them properly. So 1,000 ticks here. So this is what I was looking for, basically. I was looking for the A wave up here, and then a B wave, and then a C wave, but I'm getting that 5 waves here. I suppose I could get a B wave out of this situation here, but what I wanted to say is that this will probably come down a bit further here. So don't worry about where the low is. You don't need to worry about that. But what you need to do is that once it is in, you're going to see short covering going on, and you're going to see the market move back up. Now, it may move back up 40%. It may move back up 80%. May move up right on the 61.8%. It doesn't really matter. The point being is that there's going to be a low in here, and it's going to kick back. So first of all, it leaves this low here exposed to go short on. That's one thing. And then the next one will be under the second low here. So you may be able to work out 5 waves going up here, and then it'll pull back again. So that will be your B wave low. And then what normally happens is the market will come down to that previous area through here, and then it will kick back here again. Okay, then it'll go back here again, and then it'll come down again. It'll find that a support until it breaks through, and then it'll kick back into it, and then down again at that point. You know, it'll be something like that. So you'll have this 4,400 to work with here, so that's going to be sort of helpful. So you can look for, you know, it might be a nice simple, when it goes through the level here, the 400 here, it's going to go back and check it, and you start from the bottom and then work up. And most of the time the market will push back up and come back up the top here. So you'll end up with this pattern here coming back up above the top. And this is more common, this pattern. So then you have to sort of rinse and repeat and do the same thing over here. They're just fractals, a big fractal, smaller, and then drop. So there's plenty of room for refinement. And this little move back up here will be the same as this bigger pattern here. So it will be the arrival, the reaction, the first low below the level, an ABC pattern here, and so on. So you keep kind of working it. But so that's really where that is. And yeah, the only other spanner in the works I could see here is that the 5 waves come down here, and then we have some sort of B wave here, and then a C wave coming down here, and then completing my B wave up there. That's what I originally thought. But we just may not get that because of the length of this wave structure here. You know, that's the only thing I can sort of add to this situation here. And the other thing is too, you know, when you go for this position on the short side here, it doesn't have to be, you know, it doesn't have to be, there'll be support on this number here anyway. You know, it doesn't have to be a big position, you know, you could just do a small position here, and then do a small position under here. And then if it looks good when it comes down here, it's going to like probably kick back again. So you need to sort of handle that heat again, and then look to add again over here, you know, build it to the downside. Rightio. So sorry to spend so long on the S&P, but I had a bit to talk about. So the Nasdaq's the same as well. We've got this nice, we're going to call this in. It's hit at 61.8%. We'll need to look at this as wave 1 here and wave 2 here. So this may or may not, I don't think it's quite finished yet. It'll probably finish off in the Asian session, but it'll be back like this here, and then it'll come down here, and then it'll kick back again over here. So you just got to keep short and new lows here, that's all. You could short the high up here too, based on this 5-wave structure here. That's not going to hurt. It doesn't have to be a big position, so you don't have to worry about it, because you don't want to worry about the money. You need to play the game and not worry about the money. If you're worried about the money, then you've got too much money in the market, and you're gonna lose it at that point. Anyway, that's all of that, and we'll move along to the other guys. So this is the DJ here as well. So I've had this as the A, the B here, 1 and 2, and the 3, 4, 5. So this is a little bit different here. I'm not quite sure. I wouldn't go shorting this one because of these lows over here, by the way. There's going to be a lot of support around here, you know. It'll probably come down further. You know, it'll probably give us 1, 2, 3, 4, and 5. But I don't think it's going to be a smooth transition around these lows here for the DJ. The Russell I was looking at in 2 ways. This is the ETF here. So it hasn't really risen that much from the low here. So it looks quite good as a wave 4. So this would play out down here as 5 waves coming down. But on the futures, it's come a little bit higher. So it's the same thing going here as well. We do have 1 and 2 and 1, 2, 3. Yeah, so let me just check that again. Oh, it makes a nice B wave 2 here, really. 1, 2, 3. I could probably lock that in. 4, yeah, I suppose we could look at that as 5 waves. Look, it doesn't really matter, because if it's a B wave, when it finishes here, it's going to continue to go up. So you'll have that low exposed. So once it does move up here somewhere, right, then you'll have this low here exposed. So then you can short it from that point. And then you can look at this. You can look at this over here as, I'll just put this here as wave 1 and 2 here. and 3 here. I mean, this would be a good one to short because it's just generally weaker, you know. So wait for that low to come in, and that will be the short at that point for the Russell. Then we come over to the European markets, and this is where I've also made a mistake as well. We were looking for an A wave and a B wave and a C wave moving up to here as this ABC, but I'm wondering if we need to tie it into, I mean, it hasn't really come back up here very much, has it? You know, but at the same time, the stochastics has come down quite low here. This would also be 5 waves here as well. Now, it could certainly be that we've got the A, the B, and the C wave here and then move up. You know, that's the spanner in the works really for all of the markets at the moment. And when you think about it, you know, this whole correction coming down here, if we look at this as the A wave here, the B wave here, and then we'll have the C wave coming down here, we're right in the middle of the correction, you know. So it's not a good place to trade. It's where you need to be sort of really careful. It will probably follow the S&P down, so it won't be this. It'll be this move here and then coming down at that point. That's what it'll probably be like. So I know a lot of people got these things counted as wave 4s here, but you know they've risen too high, and it depends on the market and so on. So I would be, if that rallies here, then look for the short trade here and just do a 25% position here, because this low here will also be important as well for traders. So this is where you get, well, we can go to the 5-5 here as well. Doesn't really matter either or Arthur Martha there. So basically you can just use that there as well. So that means that this might drift down in the Asian session. It may not, whatever. If it's going to move up here and then it's going to come down again, it's eventually going to hit on these lows and this 500 here, and then it's going to bounce off that. And then if it's going to get itself through here, it's going to eventually come through, and then it's going to come back and retest it. And that can be a short trade at that point. Now, it doesn't stop. That would be the main trade, you know, a full position. Anything that you do in above here and above here, they should just be very smaller trades, because you don't have that number on your side yet. You know, that's the thing. And then we come over to the FTSE. The same thing with the FTSE as well. We're expecting a wave 4 like this here, but I have to say that the 38.2% retracement level came in about here, so maybe I've got to readjust all of this here as well, and fix this up. So maybe I've got to look at this slightly differently. Maybe I've got to put this here and put that there and look for this as 5 waves to the upside and call that top in there as well, because you know this market's going to be pulled around by the other markets. It's done everything because when we were speaking about all of this, we knew that the Australian market and the English market here would be doing a wave 4, while the rest of the markets would be doing a wave B to the upside. So it appears that the Nasdaq has done its 61.8%. So I don't have a nice 5 wave structure down here for this at the moment. So what we could do at this point is, you can see we've got this trend line that comes in on the 73 here. So if I was going to short it, then I would want a classic trading levels pattern at this level as the short trade. So I'd want that first low below the level. So anything that you do before that will be at risk, at a higher risk. Everything's risky. So yeah, but it's pretty clear that we've got to come down on this. So if you don't overtrade, because this is such a nice third wave coming down, and this is, it's a bit of overlapping in here for this as 1, 2, and you could probably do WXY or something as well. It doesn't really matter. It all goes into wave 4, but it's looking quite chirpy here. It's not looking that bearish. That's 5 waves. That's corrective. Let's just say it'll probably just continue to edge lower, but it's going to get bouncy on the. It's going to get bouncy on that line here. you know. So once it's under that line, then you know it's been retested, and then it's failing at that point. At the moment, it looks sort of okay, you know, it's in a position of strength, but you want it in a position of weakness. So it's all about this number here being the resistance, and so on. So we come to the Australian market, and yeah, so we're looking at this in a couple of ways here. This would be the same as the English market here, as 1, 2, 3, 4, and 5 coming down through to here. It's obviously a little bit more bearish in this case, and we can look at this as an A and a B, and 1, 2, 3, 4, 5. Yeah, I know it's got overlap here, and we could put it here and do a WXY on all of that sort of stuff, but it doesn't really matter. We got that top in there. So I would imagine that this is just going to be the same. It's going to be I mean, it's basically mirroring what's happening in stocks in the US. So this is likely to give us a move down through here. So this will be 5 waves that we can track here for the short term, at least anyway. And we can do the same. We can do the same thing here in terms of the corrective. It's good that it's working on this level here, because it's been the support, the whatever it is, 71 here, and there will be a bounce off here. So if you can trade from here down to here, then we'll give you a tick or a star, and you've done very well. Alrighty, thanks for tuning in. And I'll just have a look at this on the bigger picture here on the daily chart for a moment. There's a couple of ways to look at it, but basically I was looking at it in terms of, it's a bit complicated, an A wave here, a B wave here, and a C wave into this area over here. So that will be about right, I think. So we'll get that little bounce off here. That'll be a 3rd wave, 4th wave, and a 5th wave coming into here, finding this support here for that. So yeah, that's the trade from 71 down to 7,000 at that point. I mean, we could extend this out and make it much larger, but I'll just keep it in line with the FTSE for the time being here. So it's a bit of a stretch, bit of a distance here, so it may not get all the way, but then we can look for buying opportunities, I reckon. We'll see. Rightio, that's it. Okay, thanks for tuning in. Cheers.